Good morning from Los Angeles. Power Hour is back. You guys remember what happened last week? We had a power outage. Without hurricanes, without earthquakes in Los Angeles, we had a power outage, and I couldn't do Power Hour last week. How about them apples? Well, we're back. So we're going to take a little bit of, care of business first, and then hit the topics and my positions. And it's been an amazing week. I'll share with you guys my positions anyway, and then go through my watch list for next week for the heads up. And please hammer me with the questions because Q&A is done at the end for whoever is new. Oh, we have a semi-pro. Actually, we have a pro in the house. What's up, Vinny? So Power Hour is back. Let's go through the usual business, taking care of business part of it. So every Monday and every Friday, I am live at 10 a.m. Pacific, 1 p.m. Eastern. Mondays are called Trading with Sergio. Fridays are called Power Hours, where I get to discuss whatever happened during the week as far as macroeconomics is concerned, because you can't just look at charts. As much as I love looking at charts, you can't just look at charts. You need to consider the macroeconomy into your trading, right? The other thing is Monday Trading with Sergio, and Friday Power Hours continuing indefinitely. So please join live. If you can't join live, please, pretty please, check the replays. Please put a thumbs up. I appreciate that. Chris says it helps the algo. Going forward on the other channel and this channel, Chris is the YouTube manager. Chris's wife is having the third baby. Okay, and a boy is on his way. So we're gonna have to figure it out. I'm gonna probably fly solo. Well, I do it on this channel anyway, but on the other channel, probably fly solo. Maybe I'll pick myself a couple of guest hosts for a couple of weeks. Like Johnny Carson used to have. If you all remember who Johnny Carson is, probably some of you are too young to remember that. More importantly, we'll figure it out. I'm not concerned, but I will be here regardless. Mondays and Fridays. Mondays Trading with Sergio, start of the week. Friday Power Hour, end of the week. Another thing, as you guys know, you requested it, Serge. We can't follow you. We want to follow you. Well, okay. First of all, this is not trading advice, investment advice, none of that. What it is information, education. I hope you guys are learning. I hope you guys have finished your books. It's been 3 months now, right? I know a lot of you ordered the books. You have to read it so we can get, well, we're not going to be at the same level, but somehow, I have a feeling that a lot of the stuff I say is going over people's heads because it's my fault. My fault being I expect everyone to be like me, which is wrong. It just doesn't work like that. But I'm sharing my 30 years of experience with you all. But at least what I want to do, and I keep saying this, I don't want to give you a fish. I want to teach you how to fish. If I give you a fish, yeah, you'll be fine. You won't be hungry for a week or 2 or 3 or a month. And then what? Right? At some point, the crutch has to go away, and you guys have to start figuring all this out on your own. Therefore, education is key. You got to read the books. The books are on the community tab on the channel. There are 2 books that I recommended on technical analysis, and there are 2 books I recommended for option trading, which I do quite often. If you want to get into it, I hope you do, because whatever we're doing in our lives, we need to make more and more money. I mean, it's not enough. We know what's happening to inflation, and it's hurting everybody. So this is one way that I can pay it forward and be of some help. So there are other things on the community page of the channel. Community page, by the way, on the YouTube channel, there halfway down the middle, there's tabs. videos, shorts. I think it says one says live, the next one. If you swipe left, not the channel, just that one row. The last one is called community. Click on that. You will see the books that I recommended. I post the other thing I've started doing as of last week. This is going to be like the 6th one, I think. I'm posting my open positions every Monday, Wednesday, and Friday, latest by 2 p.m. Pacific, after the market closes. Now, that way you guys can tag along. But again, risk is on you. This is not financial advice, investment advice. What I do does not mean what you can do. The reason for that is I may buy something or short something on a Monday, but by the time I post it on Wednesday, it may be gone at 7 a.m. on Tuesday, right? So that's part of swing trading. I don't day trade, but if I do transact and I have a 50, 60, 80% gain on an option, I'm going to take my profits or scale in and scale out. By now, you guys know I don't like putting more than 6, maximum 8% of my account equity into one position. And that may include options, that may include equity or shares. So do it, you can tag along. I have no problem you doing it, but the times are doing it, the spots are doing it, that I'm doing it is difficult for you to chase and to figure out. That's why I want you guys to read the books. That's why, even if you don't tag along, look at the positions and say, okay, why did he do this? Why did he buy these options, these strike prices at this level? And then when I sell them, when you guys don't see it in 3 days, it's not there. That means I liquidated it, right? I either took a profit or a loss. Then you guys can say, okay, why did you sell it here, right? So my point is, you're more than welcome to follow. So I'm going to post it again at the end of today, my positions. So full transparency. Again, it's not trading or financial advice. Last but not least, before I go into the topics, which are really cool topics, actually, we're going to talk about how to trade the elections. Elections are coming up in a week. I think we have 5 trading days left after this, or 6 maybe. But that should be an interesting segment. So we have memberships for the channel, as a lot of your members know. So Techie B is here, so he's a member. He's got a little, whatever that is, emoji or something, whatever. So I do 2 extra live streams every 2 weeks on a Wednesday, 3 p.m. Pacific, 6 p.m. Eastern, for the members. The members get 2 extra live streams. Besides that, they get a lot more one-on-one interaction. It's more of a one-on-one coaching or mentoring sessions. We can share our account positions. And the other thing I do is I put the StreamYard link on. We can all come on and I can see your faces, because a lot of you have YouTube names, which I don't even know your first names. So, it's like a corporate Zoom call, let's say, right? 10, 12 people, whatever. And I urge all members to be present. So the next one coming up is, let's see, look at the calendar. Cool. Next one coming up is on the 30th, this coming Wednesday. Okay. So we did 2 of those already. Amazing, amazing, amazing. I think a lot of people got a lot of good input out of that. And they gave me ideas. That's, it's an exchange of ideas. It's not like I'm just going to go on and blabber for an hour. No, we answer questions. We help each other. If they have account issues or other things, right? I think it's well worth it. Just to sweeten the deal, if you do choose to become a member, you guys see my t-shirt. Actually, it's my favorite t-shirt. So Gig With It is my unofficial, official merchandise supplier of the channel. We're going to put the store, because I'm creating some new shirts, such as, bulls make money, bears make money, pigs get slaughtered, don't catch a falling knife, all these things that I keep talking to you guys about. But that's coming up in the future. The other thing that it is that if you do become a member, you will get one of these t-shirts for free. Okay. I mean, it's a sweetener, but we're hoping that if you do become a member, you stick around and you keep learning. I think it's not the price of the membership. I think you're getting a ton more value out of that. But I thought, okay, we'll just send you guys a t-shirt. So when we're doing our members only lives, we all wear the same thing. That's kind of a cool idea. So with that said, what else? That's it. Taking care of business. So welcome. Up. There is another member. All right. So Vinny, what's up? Techie B, hello. Queen Brown. Hey, Lynn, what's up? Connie Shea, good afternoon. Good morning. Wherever you are, East Coast, West Coast. I couldn't become how to show me where it is. Okay, so when you go, Lynn, when you go to, first of all, before I even do that, if you're a member already, and if you have not requested, this is not just for new members, this is also for members who have joined like a month ago, because that's when we opened the membership. I think only 4 or 5 of you have emailed me to ask for the shirt. It's a free shirt. I mean, first of all, it's a great shirt. It's well done. It's done in the US, not in China. And high quality material. You can put this through the wash a million times. It'll still look like this a year later. Color. So what I want you guys to do, new or old members, existing members, please email me, Sergio at sergioavadian.com. Simple. Sergio at sergioavadian.com. Email me your physical address and email me the color you want and email me your t-shirt size. So once you do that, I'll send it in, and then in a week or maybe 10 days max, you will get the t-shirt. So when you do come on the members only live, we'll all be wearing the same thing, because I think this right here is probably the most important thing in life. Hashtag know your worth. This is nothing to do with rideshare. This is nothing to do with trading. This is what you need to go by in life. You gotta know your worth. If you're in a relationship, you gotta know your worth. What are you putting in? What are you getting out? There's an ROI in everything. There's definitely one in trading, but relationships, personal relationships, workplace, you gotta know your worth. If you don't know your worth, you will never be courageous enough to ask for it. Once you know your worth, then you can ask for it. Yeah, you may hear no, but it's okay. So existing members, and if you're considering becoming a new member, email me, Sergio at sergioavadian.com. You get the free t-shirt. It's on the website, by the way. It's like a $30 t-shirt plus shipping. I'm hoping that you guys stick around for 3 months so I don't take a loss on it. But not the point. Lynn, how do you get the membership? So when you go to the YouTube channel, my YouTube channel at Sergio Avadian, there is a button that says join. When you click on join, that makes you get into the membership club. That's it. And I think, okay, I'm done. I'm done with the blabbering. Yeah, look at Techie B. See, it's spoken like a true member. If any member doesn't take their shirt, I'll take 2. No, you got yours already, I think. So we do keep track, so don't double dip on me, please. And so you get the free t-shirt, and you get 2 extra live streams a month. Wednesdays, 3 p.m. Pacific, 6 p.m. Eastern, one coming up on Wednesday. More importantly, it's not just me talking. It's everybody exchanging ideas. So, some of the members, please put on the chat, and I know Techie B was there, Rich was there. We did 2 of them already. Talk about the experience that you guys had. And then both of them went close to 2 hours. Okay. So you're definitely getting your money's worth and the shirt. So with that said, I'll answer all the questions and the comments at the end. I'm going to get into the topics because I want to hit them fast and share my trading screen with you all and the usual stuff. So what do I talk about continuously about the US? I talk more than any other subject on this channel about the US national debt. We are just about, I think either today or this weekend for sure, we're going to hit $36 trillion with a T. there's a lot of content on the channel. You can go check it out. I don't want to get into details how we got there and how we're going to potentially lower this thing, which is mortgaging my kids' future, your kids' future, your grandkids' future. This is a horrible situation. This is not political. The house is bankrupt. We can't keep doing this. We can't keep, by the way, please go check out one gentleman's Bitcoin strategy and what he's doing to fight this debasing of the US dollar. It's on the channel. We released it on Tuesday with Sonny Poe. It's on the Insiders of Wall Street and the podcast section of the channel. He's doing something that a lot of you can do, but then please watch the whole thing because, you know, it's not for everyone. But whatever he's done is working. He's basically copying what Michael Saylor is doing with Bitcoin without leverage, actually. So the debasing of the currency is something that is costing us quite a bit. What happens is that these printing machines, they don't even print, but then they keep printing and spending money. Washington has not seen a dollar that they don't like. They spend the money without having the money. That is the exact reason why we have this national debt ballooning $1 trillion every 100 days. At the moment, our deficit, let's say 36 trillion. Our GDP, gross domestic product, is $27 trillion. Okay, so 36 divided by 27 trillion is 100, and we're running at 130% of GDP. Just the interest payment on this 36 trillion, which is going to be 37 in another 100 days, is this year, just this year, is $1.2 trillion, just the interest. How about we took a couple $100 billion of that and helped these people in the hurricane damaged zones? There are still bodies floating. Okay, Washington, how about that? But now FEMA comes and says they're broke. I don't want to make this political, but I get hot when I see these things, that we can pay $1.2 trillion in interest to IOUs all over the globe, right? But when people are in need, we can't help these people because FEMA is broke again. This is BS. Okay, I'm not going to cuss on this channel. So this is complete and utter BS. So, but I was thinking, you know, we may not be the only people because all we're doing is inflating and spending towards GDP growth. Well, that's not working either now. For every dollar we're borrowing, we're producing 56 cents worth of GDP as opposed to $4 in the 70s and 80s when we dropped the gold standard. So I'm going like, okay, we're just inflating into prosperity. Well, the rich are getting a lot out of it because they can borrow at zero, right? And they buy all the real estate, they buy all the inflation hedges, right? That's why you guys should go watch what Sonny is doing with Bitcoin, right? I have Bitcoin. I have about 8% of my assets in Bitcoin. Everybody should own Bitcoin. But so then I was like researching, and I said, who else is in our shoes? Then I came across this in the wonderful Kobesi letter off of X on Twitter. I follow them religiously, and please go follow them. They put out amazing, amazing content there on X. I'm on X as well. So I was thinking, we're in a debt bubble? No, we're actually great compared to China. Well, what is China doing now? They're adding more to the debt. I mean, it's important you guys understand the global situation, okay? You're going to say, well, what does that have to do when you're trading options, zero DTE options? No, well, it may not mean much, but on the bigger picture, right, it makes or breaks the trend, right? So China is in a debt bubble, just like we are. And then China's debt to GDP, ours is at 130%, people, and it's going to keep growing. It's going to become, the problem with ours is, what if, like everybody is thinking, there's no soft landing or economy slows down and our GDP shrinks from 27 trillion to 25 trillion to 23 trillion, okay? While the debt is going this way, $1 trillion every 100 days. You see what's happening? So debt to GDP is going to keep getting wider and wider and wider. You guys need to start reading and talking about these issues at the dinner tables. This is important stuff. So China's debt to GDP hit a jaw-dropping 366% in Q1 2024. I was thinking we're bad. No, we're great compared to them. Now they're taking our model and trying to inflate. On top of everything else, their housing sector is so bad that pretty much every construction company in China is bankrupt. But as we know, the CCP, Chinese Communist Party, runs every business in China. So what is the PBOC doing? Central Bank of China, their Federal Reserve, they cut the rates by 50 basis points. They just cut the rates by another 25 basis points. They are flooding the market with money to get their asses out of this disaster. But what are they doing? They keep adding to the debt as well. Since 2008 financial crisis, the ratio has doubled. There's that two little dots with the 45-degree going this way. To put this differently, for 1 unit of GDP, which is ours is also 1 unit of GDP, the Chinese economy has produced 3.66 units of debt. So let me straighten this out. So remember what I said about debt to GDP ROI, right? So when the US borrows $1, it produces 56 cents worth of GDP. China borrows 3.66 yuans, okay, and their currency is yuan. It produces 1 unit of GDP. So ours is at dollar to 56 cents, which you guys understand what's happening here, right? If you're borrowing $1, your GDP should be at least equal to that, what you're getting out of it. Okay. If you're less than $1, 1-to-1 ratio, don't borrow, right? When we got rid of the gold standard, we were borrowing money. Borrowing accelerated. But what happened? The economy exploded because at that time, for each dollar we were borrowing, we were getting $4 of GDP in return. Fast forward to 2024, for each dollar the US government is borrowing, they're getting 56 cents in GDP in return. Horrible. Stop. Don't do it. And China is worse. They're borrowing 3.66 units to get 1 GDP. You guys understand what's happening here? This is a no-win situation for anyone. So non-financial corporates have the highest ratio, which is the housing sector in China, 171%, to the debt ratio, debt to equity ratio, followed by the government sector, 86. So we are actually looking great. So that's why, the whole globe is teetering on this, cliff of disaster. So, this may come a little vulgar to some of you watching, but, we are the best looking, woman in the entertainment house there. So although we're horrible at 130% debt to GDP. So this is the news. This is the news out of China. So I thought we were bad. Good luck to the Chinese. But then what's going to happen is that and the other thing is, if Chinese economy is massive. So in the old days, we used to say, if US catches a cold, the world catches pneumonia. Well, if China catches a cold, well, this looks a lot more than a cold. This looks more like a pneumonia. What's going to happen to the global economy? What's going to happen to the inner relationships of these banks? What's going to happen to the currency? So start thinking about it. This is not good. So I found a country that is worse than us. Yippee. No, actually, that's horrible for China, but then they're all controlled. Here, at least, we may have some resemblance of sanity that people should stop spending. Washington should be full of people who are looking to balance the budget. Nobody can run their household like this. You can't. You'll be bankrupt 10 times over. So we'll see what happens with the elections. Hopefully things will get fixed up. So that's the first topic. Next topic I'm going to talk about, which is the headline of today's Power Hour, right? So I actually put a video on the day that the market dropped, which looks like it was a one-day thing, but we'll talk about that in a minute. U.S. households now hold 48% of their assets in equities, the highest since the 2000 dot-com bubble. You guys see the chart on the left. Again, this is from the Kobesi letter. My hat's off to them. I love the way they put it out. Please go follow them on X. They have over 600,000 followers on X, and it keeps growing. No wonder it does, because they're putting out this kind of short but important information. So since the 2020 crash, This has risen by 13 percentage points as the stock market has rallied 160%. I'm not saying we're at the end of the game, but I really, I've seen these movies at least 4 times before in the last 30 years. I think the market is in the biggest bubble in the history of the bubbles. Okay. And what is a market, though? Market is a mechanism to make everybody wrong. Yeah, my bias is negative, but I'm still making money on the upside. That's not the issue. The issue is when everybody's in, who else can come in that could push the market higher? Everybody's in. 48% of the assets. 48% of all the assets of households is in equities. And here it is. The chart on the right side, which Kobesi letter does beautifully. According to the Kobesi letter, and they finish with this one-liner always. In other words, households are all in on the stock market rally. So what are households? Households are retail. When retail is all in, the rug pull is near. Trust me. However, the timing of it is not my problem. I trade whatever is put in front of me, and then I'll, get in, get out. I'm okay. But for you all who are maybe thinking of dollar cost averaging, long-term investing, and things like that, your chance may be coming up. So, and bullish sentiment is at record levels, 100%. But look at the chart, and we'll finish with that. Households' aggregate financial asset allocation is the title of the chart. In 2000, as you guys can see, by the way, you can take screenshots of this and study this, or go to Kobesi letter on Twitter and have these as well. 48% was the high before the 2000 dot-com bubble. Is it different this time? We're going to find out if it is different this time. One thing that was different this time is that, we weren't printing as much in 2000, but that I was definitely on the desk trading during the 2000 bubble. It wasn't funny. It was musical chairs, and when the music ended, there were no chairs, none. So is it going to end this time? Probably not as violently as it did in 2000 dot-com bubble or the 08 financial crisis, but it will always end. These things, right now we have the AI bubble going on and all the stuff, right? And it's going to change the world. I mean, look, it is what it is. You guys got to make up your own mind. But so last time we hit at 48%, we had the 2000 dot-com bubble. The next one, that the households were almost all in, retail basically was all in. It was 2008 financial crisis, and we know what happened then. This time, slowly we grind it up. We're equaling the 2008 dot-com bubble levels as far as household participation or retail participation is concerned, and we're at 48%. Does that mean we cannot go to 50%, 52%? Sure we can. But how will this musical chairs end? We will all find out together, because I'll be here talking about it. So be careful, people. That's all I'm saying. I'm not saying don't invest, don't trade, but be careful. Risk management is key. 3 Ps are key, right? Patience, position, and planning. You don't have to be involved in the markets every single day. And so that's the next topic I wanted to hit with you guys. The next one I'm going to talk about is budgeting. Okay. This is something I do, which I really wish all of you to do this. Please start doing this. This is a lifesaver. Okay. It's so simple to do as well. Okay. I wish the US government did this. We wouldn't have the $36 trillion in national debt. Okay. I mean, so in budgeting, there's 2 kinds of budgeting that I wish the US government does. And if, we have a Doge or, Department of Government Efficiency person, I'm not going to say names because some of you may not like him. I wish he takes on something called ZBB. ZBB is zero-based budgeting, meaning if you have a 1-inch pipe that's coming in revenue, you don't have a 3-inch pipe that's going out. That's what we have now. We have a 1-inch pipe coming in, revenues coming in to the treasury, and we have a 3-inch pipe that's going out. I'm like, no, we can't do that. So on zero-based budgeting, which a lot of actually decent companies deploy, is whatever is coming in that's all we can spend. We're not going to go borrow more and spend more and do this. Yes, do they slow growth a little bit by not borrowing? Of course. But then Look, I'm not telling people not to borrow money. If you're going to borrow it, do it intelligently, not like we're doing it. Borrow from the future, unborn future generations of this country. So the way I do it in my household is ZBB is quite difficult, but then if you do it this way or ZBB, either way, you will have a balanced budget in your household. Okay. So there is a 50-30-20 budget rule. Pretty simple rule, man. I live by it. Not all my life, I've made my mistakes. Okay. But then once you get married 20 years ago, I think, I need to have a budget. I can't just make money and blow it all on new cars and, dinners and things like that. So now I got to go. I said, okay, I researched a little bit. I go, okay, so what is the 50-30-20 rule in budgeting? 50-30-20 rule involves splitting your after-tax income in 3 categories. Simple. 50% goes to needs. What are the needs? Now, you can adjust this any way you like, but you should stick to pretty close to these numbers. Needs, your rent, your mortgage, your car payments, your credit card payments. Please, if you do borrow in plastic, please float their money for 30 days and pay your balance at the end of the month. Do not carry balances that's going to hit you with 30%. So 50-30-20 rule, 50% goes to needs. Those are the needs. Those are the basics, right? 30% goes to wants. Actually, that's in my book, that in my household, that's lower. That's 20 to 25. I will not go to 30. Now, wants are what? Oh, I want a new car. Those are big ticket items. I want a vacation. I want to do this. I want that. We all want it. Okay. And also, I mean, that 30% is the one that you can really play around a lot, which means you can take some of that 30%. The wants part, want is easy, and getting the want is also easy. You just put the plastic out and get it. What I try to do is I try to lower the wants, add it to the needs. Because of what? Because of inflation, right? Everything I'm paying for has gone up. My insurance has gone up. My food has gone up. My rent has gone up. So you can balance it out. But the most important part of this 50-30-20 is the 20 part. As savings. Okay, well, since the great financial crisis, your savings earned you nothing, zero, right? Well, what happened though? Fed raised the rates to what? 0 to 5%. Short-term T-bills, CDs, are still 4.5%, although the Fed's lowering the rates. So on a nominal basis, you're still breaking even or losing a little bit. Nominal basis meaning if you deduct inflation from the return you're getting at the bank or your money market fund, short-term money market fund at your broker, or bank, although the government gaslights and tells you guys inflation is running at 2%, it's BS. It's not. Inflation is 5 to 7% per year. That's the debasing of the currency. Print, and pump it into the economy. Doesn't work like that. So they gaslight and they go 2% inflation is great. I'm like, no, we're not at 2%. Inflation has never been 2%. But even if inflation is 5% and you're getting 5%, you're at least breaking even. You're protecting yourself, right? So the 20%, I don't like bonds. I don't like because I can get much higher returns than the benchmarks, such as the S&P 500 or whatever with my trading, supplement my income that way. So what do? I take that 20% every year, right? Added, I take at least 10% of it and put it in my long-term portfolio. What do I do with that? I buy stocks, long-term. Okay, you got to have 2 different accounts. Don't mess with that. It's like that infomercial that we used to say, set it and forget it. Does that mean you don't get in and out? I mean, I've been talking about, since I started the channel, I've been talking about Carvana, I've been talking about Kava, I've been talking about NVIDIA. All these stocks that are doing nothing but wonderful, wonderful wealth growth for you guys. Dollar cost average. I take that 20% and at least 5 to 7% of it goes into my trading account. And then the rest goes into my long-term investing account. So please follow this 50-30-20. If you can't follow this, you will not have anything to show for yourself when you're older. Just do it. Please do it. If it's 60 of your after-tax income is going to your necessities, needs, I understand. okay? Because none of our earnings or none of our income is catching up with inflation. I mean, we know that, right? But I'm urging to have some resemblance of a budget. You don't have to do the 50, 30, 20, but I urge you to do it this way. And people go like, well, I can't, Serge. Okay. What are in the wants? That 30% is too high, right? Okay, what are the wants? Do you want Starbucks every day? Do you want Big Mac every day? What do you want? You're not going to need a car every day. You're not going to need a TV every day. You're not going to need a cell phone every day. These are the major ones. A lot of the wants are frivolous expenditures. You go to Starbucks, pay $7 for a latte. Make your own latte at home for 50 cents. Okay? That 30 will collapse to 15. A lot of people want a lot of things. I want a lot of things. I want a jet. No, it's not going to happen. It doesn't work. My point is, please control the wants. If you can, I would love for people to do 50, maximum of 60. That middle 30 goes down to 20 or lower. That doesn't mean be cheap. Doesn't mean don't go out to eat. Okay, go out to eat once a week, once a month, maybe once every 2 weeks, as opposed to eat out every day or order food on DoorDash or Uber Eats or get ripped off, right? That 30% could be played with. So if you can lower that 30% and then for a month, let's say, and this is not like forever, you should do this every month because some of your incomes will fluctuate month to month. If you can get to 60, 20, 20, great. But do not, one thing is for sure, do not lower that last number, which is your savings and investments, to lower than 20%. Don't ever do that. Don't sacrifice your compounding ability, your return ability by increasing the 30 in the middle. Don't do that. If anything, lower the 30 as low as possible. And we all know we can. Some months you may have to add it to your needs because your rent has gone up probably over your car insurance has gone up. I understand, but don't mess with the 20, the last number, and please do this. Please have a budget. Without a budget, you're going to be just like China. You're going to be just like the U.S. government. Please control yourselves. The next topic I'm going to hit is Bitcoin on steroids. Okay, listen up. Again, I talked about this just 10 minutes ago. Please go check out the interview on Insiders of Wall Street with Sonny. I've been following him on Twitter for a long time. And I've been asking him, can we do this? Can we do an interview? So can you explain people how you are fighting this debasing of the currency, how you're fighting the printing machines, how you're fighting inflation? And he was kind enough to do it. It's a wonderful, wonderful interview. Please, please go watch it. I don't care about YouTube, but all the people I've put on there so far, I've done 2 with Jack Barugian, head of the Chicago Mercantile Exchange, from being a runner like me in my bag, in the wallpaper back there. And then I did one with Anthony Crudelli, an OG of traders for 35 years. And then I did one with John, who's also on Twitter, he's been a trader for 30 years. He pivoted from corporate America to full-time trading. And the last one is with Sonny on Bitcoin. And we did talk quite a bit about actually MicroStrategy, Michael Saylor, what he's doing, how he's trying to copy what Michael Saylor is doing. And hopefully you all know who Michael Saylor is, CEO of MicroStrategy. So Bitcoin, as we know, has been going sideways for the last 6-8 months. Okay. It's going between 55 and 65. Now it's about 67, 68. It's trying to break out. For me, that's the next base that Bitcoin is building. Could it be the top that everything collapses and it rolls over, goes to 25,000? Possibly. However, my money says that the printing machines will never stop. Debasing of the currency will never stop. As far as I'm concerned, if you guys are looking at gold, silver, what's happening is that none of those asset classes are buying what the Fed is saying. Okay. In fact, there was a great interview with John Tudor Jones on CNBC. He's actually shorting the bond market and saying that the Fed is going to lose the inflation battle. They should not have cut the rates so aggressively. They're going to bring back inflation. And I look at Bitcoin as an inflation hedge because of why? Because it's a finite amount. You cannot create more than 21 million Bitcoin, and 19.5 million have already been mined out. Okay, so you don't have more to go. Now tomorrow, if somebody says, "Yeah, I'm just," and we talked about this all with Sonny on the interview. Amazing interview. Please go check it out. But long story short, MicroStrategy I've been talking about for 3 months since I started the channel about Michael Saylor. What Michael Saylor is doing is he has an existing company called MicroStrategy, which is an IT company. That company is producing goods. Okay, there's revenue, there's profits in that company. So what is he doing? He's taking that, mortgaging it to the future. Okay, he's creating less than 1% interest rate convertible bonds, and convertible meaning convertible into shares, and almost at $1 billion at a crack, he's issuing these bonds. But that's because he has a company, right? And he's buying Bitcoin with it. So MicroStrategy is the largest Bitcoin holder, corporate Bitcoin holder, and probably personal in the world at the moment. Okay, but so he has, I think, close to 260 amassed close to 266,000 Bitcoin with an average cost of 37,000. We're at 67,000. I've been saying, MicroStrategy is turbocharged version of steroid pump version of Bitcoin. Now, you don't have to do it that way. You can do the BlackRock Bitcoin ETF, very low cost. IBIT is the symbol. And I talked about the surrogates now, ETFs of MicroStrategy that are out there, MSTX, MSTU, double 2x of MicroStrategy. But something weird is going on with has been going on with MicroStrategy. Bitcoin hasn't made a new high yet. Okay, Bitcoin's high was like 72,000. It's at 67, 68. I believe on the next leg up, Bitcoin is going to double from here. Okay, and it's going to be a quick move. So okay. MicroStrategy at 200 and I think it's about $220 a share. Their Bitcoin holdings at 58,000, 266,000 Bitcoin is about $18 billion. They're in cold storage. They hold the Bitcoin. Okay. The company's market capitalization, however, now somehow is at 2.7 times of their Bitcoin holdings, meaning the company is being valued at a close to $40 billion. Now, I know about the company. The difference between their Bitcoin holdings and the company's market cap is 2.7 times wide now. It literally, about a month and a half ago, while Bitcoin was still at 58,000, was not 40 billion. It was about 1.4x of their Bitcoin holdings, because there is an existing company that produces goods and making money and all that good stuff. A lot of people on Wall Street are saying that 2.7x of their Bitcoin holdings is extremely high, and there are hedge funds who are coming in and shorting, MicroStrategy, saying that this is not sustainable. Now, I'm not going to get into any of that innuendo. Should you short it and not that? I have my trade set up on this situation. If you guys are interested, maybe on the members only, I'll explain to you guys what am I doing about this. Is that so? Should you be involved in MicroStrategy? Because now its net asset value is extremely high at 2.7x. I don't know. I would say no. What I would do is that, though, you should definitely own some Bitcoin somehow. Remember that 20% you're saving? Okay, 50, 30, 20 rule. Takes 5% of that 20 and every month dollar cost average into Bitcoin. The current MicroStrategy holders are primarily Bitcoin maxis who firmly believe in MicroStrategy's Bitcoin-focused strategy. Okay. These investors are not traders, I agree, but long-term shareholders who see the company's potential to become one of the most valuable in the world. I agree. Comparable to Berkshire Hathaway, definitely. They are ahead of Wall Street professionals, which is very true, because Wall Street professionals are saying Bitcoin should not be 2.7x times. MicroStrategy should not be 2.7x times their Bitcoin holdings. Well, stock tells you the truth. And these early believers who are buying MicroStrategy at 220 are positioning themselves for future growth. Now, think about this. If Bitcoin goes to double from here, MicroStrategy will at least double, if not more, from here, right? So the higher the Bitcoin goes, and by the way, Michael Saylor said he's going to keep doing that because his company is producing revenues, company is producing profits. He's going to take those profits, leverage those, mortgage those with convertible bonds, and he's going to keep buying Bitcoin, irregardless of the price of the Bitcoin, because he's thinking it's going to be in the millions in about a decade or less because of the debasing of the US dollar. And look, this story is going to be the fascinating one of our lifetime. And is MicroStrategy going to be the most valuable company on the planet, passing NVIDIA's and Microsoft's? We'll find out together. But so that's the news on Bitcoin. And I will talk more when I'm doing my watch list. There's a couple of things you guys need to know. But I always talk about Michael Saylor. I think he's a genius. And I think he's doing the right thing. I think he's protecting himself and his shareholders against this debasing of the US dollar. So next topic I'm going to talk about is the elections. Okay, elections are coming up. I think we have, after today, I think we have 6 trading days. Well, elections are on the 5th, so however many days we have. So as we know, there are betting sites, right? I'm not interested in any of that. I don't know how those things work. But I just put the odds, and the odds as of, I think, last Friday, because this is last Friday's screenshot, because I couldn't do power hour. Like if you go to Vegas, right, you're betting $165 on Donald Trump to make 100, and if you bet on Kamala Harris, you bet 100, you will make 140. This is on to win the elections. Okay, so these odds actually have grown now. It's almost supposedly on certain websites, Trump's lead is 20 points. Look, whatever it is, it is. I'm just going to be glad that this thing is over with. Okay, that I'm not going to talk about elections. I don't want to talk about elections. Country needs this to end, and then hopefully cooler heads will prevail, and somebody will start working on that national debt, please. Because I watch all the debates. You know, there were literally only 4 single questions about the national debt. The national debt is crippling this country. It's like an anchor dragging on a boat. Lift the anchor. We don't need that. Let the economy go. But you can't print yourself into prosperity, Washington. Don't you guys get that? You just can't. Doesn't work. It will never work. Anyway, so how am I going to trade the elections? Well, I want to trade the elections, right? If there's money-making possibility, I will trade it. So as we all know, DJT is the symbol, Donald J. Trump. There's a stock, common stock, that trades on the markets. So when I am doing my watch list, I will talk about my strategy, but I'll talk about it a little bit now to just make the segment whole, okay? So Trump Media stock, DJT, is now up 19% today as Donald Trump takes the lead in prediction markets. Okay, fine. So for your information, DJT was about $11 number not even a month ago. As of before I came on, I think we were at 37, 38. So it's almost a 4-banger. The all-time high on DJT is 75. It's never been higher than 75. So actually hit 75, then crashed to 10, 11. I mean, it's extremely volatile. Okay. Should you buy DJT anticipating Trump's win? No. Just like, I mean, it's your money. You can do whatever you want. But my advice, again, no advice, but I'm not buying it. But I have a strategy to trade it. So as you guys can see on that little chart, it says 30. Now it's at 37. It's up another 20% this week. So this weekend, Kalshi's prediction market shifted to showing Donald Trump 8 points. This was as of last Friday. This is last Friday's Power Hour screenshot. He supposedly has a 20-point lead now. Trump has taken the lead in several key swing states. Okay, great. So what is the strategy? All right. So DJT, obviously you can short the stock. I will not do that. You can buy the stock. I will not do that either. But now comes the derivative part of the game. Okay, what's the derivative of DJT? DJT has options. Okay. So as if you are reading your books, members and non-members, about options, what do we have in options? We have keywords in options, which I've explained to you guys on the education part. The first month and a half is all videos about education. Please go revisit those if you want to refresh your memory. It's on the channel. So we have call options, we have put options, we have in the money options, at the money options, out of the money options. Okay. What else we have? We have strike price, we have expiration date. These are all the keywords that you guys should know by now. Then we have the wonderful Greeks, please, delta, gamma, theta, vega. Please learn the Greeks. It will save you so much money. The most important one is IV, not the type you stick in your arm when you're dehydrated. It's called implied volatility. So the way I'm looking at this is, in fact, I may even do a leg of it today while we're live. I don't have it yet. What I'm looking at is that implied volatility for the November 15th options expiration, which is a regular expiration, third Friday of November, which will be after the elections, okay, is 3 times what it should be. Meaning, market makers are not stupid. They price these options at a level that, to me, says nothing but sell premium, okay? How do you do that? How do you sell something you don't have? Well, you can do that with options. If your account is set up to sell premium, now you have to have a margin account to be able to do that. You can do that on Robinhood. A lot of you have Robinhood accounts, but then you have to have enough money in there because there is carrying costs for that option. My bet is that, okay, let's say Donald Trump wins. All right. Well, stock has already gone from 10 to 38. By the time, the election's coming, maybe 45. Okay, so everybody is piling in, anticipating a win. Okay, well, all right. Well, the market maker already figured that out. So what do? They increase the implied volatility from 100% to 300% now. Okay. So I'm looking at 2 strategies. Okay. I'm looking at a short strangle. Okay. So I will explain what that is. And I'm also looking at, I'm also looking into doing simultaneous credit call spreads or call credit spreads, whatever you want to call it, and put credit spreads. What are those things? All right. So short strangle is selling the puts, selling the calls, collect all the premium. And when the election is over, right, what is the stock going to do? Okay. Stock may go shoot the moon. I don't know. But what you're counting on. So my strategy is going to be selling the $75 calls, which is another double from here. And stock has never been that high. So that's my real measuring stick up there. Sell the 75 calls, simultaneously sell the $15 puts. Okay. So by selling both sides, you're collecting premium. Okay. The premium, I'll look at it, and collection of the premium is probably close to $5. My anticipation is that when the elections are over, that 300 IV, literally, in fact, before these options, way before these options are going to expire, are going to get crushed. So that's the theta part of the Greeks, meaning time decay. That's going to get crushed. Once they get crushed, those options are going to absolutely hit the wall. Literally on the night of the next morning, that 300 IV is going to be more like 80 IV. And then even if the stock moves 10 more points after he wins, in case he wins, those options are still going to lose value because the market makers are going to absolutely melt those things down. The other way is to do it with less potential of profit, but less risk. Much less risk is the, put credit spreads and call credit spreads. And those are, I will still sell the $75 calls, but then with 2 or 3 standard deviation, I will go buy the $80 calls or $82.50 calls in case something like this happens. He wins, stock opens $80 the next morning. Right? Okay, my short calls are going to get hammered, but then I have protection above it on a 2 or 3 standard deviation to protect myself. But then I'm going to do the simultaneously the same thing. This could also be looked at as a butterfly or an iron condor. Please go read your books. I know now I'm going way over your guys' head, but don't worry. I will show that on my option chain when I go to the watch list. So that's the strategy. One is a lot riskier, shorting a strangle or a straddle. And the other one is much less risky, but then the return is going to be less. So I will decide on that on the coming week or so. But if they're worth it today, I will actually put on a position and explain to you guys while I'm doing it. So the next topic I want to talk about is Goldman, my favorite prime broker on the planet, the smartest people on Wall Street. And what is Goldman saying? Goldman is saying that first of all, as we know, since last October when the market bottomed, the S&P 500 is up 40%. 40. The usual return on the S&P 500 is only 10% a year, 9 to 10% a year. Well, in 1 year we did 40. So Goldman says, now could be right, could be wrong, but I wouldn't question Goldman too much. Goldman predicts 3% return for S&P 500 over the next decade. 3%. So I've been telling you guys, DCA, dollar cost average, do this, do that. Well, if you're going to get 3%, it may not be worth it. So there may be some strategy change here. But again, nobody knows what's going to happen. I still say dollar cost average. I still say it's never too late to invest. And stock concentration and high valuations could limit S&P 500 growth, warns Goldman. However, to rebut this argument, I'm looking at the S&P 500's earnings next year. They're supposed to grow 25% from 215 to 275. If that happens, you're still going to get your 10% minimum return on the S&P 500. Although this 40% that we jumped in 1 year makes no sense. And then I talked about all households being all in, right? The rug pull is near, almost like it looked like a rug pull on Wednesday. But then we're right back to new highs. So I'm not concerned. So that's what Goldman is saying. And, Goldman is king on Wall Street. I'm telling you, Goldman's bearish outlook. I mean, it's not bearish. You're still going to get some return, but nothing like, 40% obviously in 1 year. Goldman's bearish outlook comes as the S&P 500 enters its third year of a bull market with 27% annual total return over the last 2 years. That includes the downside that we took. But since last October, when the market bottomed, we're up 40% on the S&P 500. So Goldman is saying after this kind of performance, right, if you caught it, great, but don't expect, I mean, this is not bearish. It's saying don't expect, the market to give you 40% year after year, specifically on the ETF side, which is the S&P 500. According to Goldman, this high level of equity valuations is a major factor behind their low 10-year return forecast. Okay. Their model predicts annual returns ranging from plus 7% to negative 1% with a 72% probability that stocks will underperform bonds over the next decade. That one we're kind of disagreeing because, the bonds have done nothing but go down. Actually, interest rates have done nothing but go up since Fed started lowering the rates and started their next leg of QE, quantitative easing. I think the Fed has lost the control of the bond market as far as I'm concerned, because it was the first time in my lifetime and career that I remember Fed said, we're going to lower rates. And the bond market said, no, we're not buying any of that story. First of all, the bond market is too big even for the Fed to regulate. Rates have been shooting up. Mortgages are right back to 7% again on 30 years. Something is happening here. If you look at this bigger picture, people, gold is making all-time new highs. Silver is making all-time new highs. Bitcoin is about to make all-time new highs. Stock market is at a new high. Real estate is at a new high. While the Fed is cutting rates. What's happening here? I'm not sure. Right? That's why you guys need to go watch that Bitcoin interview with Sonny, because he said clearly, I'll give you one tidbit. He said they cannot afford this thing to go down. They just cannot. Because half the tax receipts that go into the treasury are from stock sales, are from capital gains of selling of all asset classes. So gold is saying, no, inflation is not dead. Silver is saying that. Bitcoin is saying that. The stock market is saying that. Everything is saying, Fed, you're wrong. But Fed goes, no, we're just going to keep cutting rates. Does that mean they're going to add more fuel to the fire? Possibly. We'll find out. This is a fantastic time to be in financial markets, actually. So many cross currents going on that I'm loving it. And last but not least, I have a Robinhood account. Actually, I will start posting my little Robin. It's like at 2,800 bucks. I started with $1,000. I've literally not given up, but I'm doing very minimal trading in there for the fact that I can't do everything I want. However, I'm not affiliated with Robinhood, but I do have a little referral link that I get like $5 worth of shares or something. If you guys all use my referral link, and you get free shares, I get free shares. This is one way that you can get money. Robinhood, if you put money in a Robinhood account, there's a gold membership. Gold membership is $5 a month, and you can get 5% APY, annual percentage yield. Okay. I mean, that's one. But now Robinhood is coming out with a new platform. This is not a review of Robinhood. I have a Robinhood account. I think most of you do. But like Robinhood will not allow you to short things. Robinhood, there are a lot of things that I cannot do that I can do on my actual account. And it's because of size, obviously. But I think, I also have Schwab mobile app. Okay, on Robinhood, it takes 2 clicks to do a transaction. On Schwab, it takes like 6. I'm like an old man by the time I can transact on Schwab. Okay, Schwab, if you're watching, you need to change those things. Make it as friendly as Robinhood is, and democratize trading. Robinhood has democratized trading. I think, personally speaking, for what it is, not too complex strategies, but for what it is, I think Robinhood is the best retail brokerage out there. Truly, ease of use. And now they're introducing something called Robinhood Legend platform, which I will have access to. Everybody will have access to it. But more importantly, you can earn 5% APY on your money. If you transfer Robinhood, your IRA account, they give you up to 3% of the cash. In fact, there was a guy on Twitter. He transferred his IRA from Schwab to Robinhood. It was like $1.3 million. Robinhood gave him $35,000. There is no upper limit. So Robinhood is doing a lot of the things, collecting, gathering assets. And with this new Legend platform, I may switch to Robinhood, actually, my Schwab account. I'm using Thinkorswim now. So key takeaways, Robinhood just unveiled. Yeah, that's the one, Robinhood Legend. The new web trading experience meant for active traders compete with advanced, customizable charting and seamless trading. Thinkorswim is like that. So all these things say to me that Robinhood at the moment, for what it is, now with the addition of Legend, will probably become number one. But for simple things, buying options, selling options, buying equities, all these little simple transactions, I think Robinhood is by far the best retail trading account, the best brokerage out there. So, if you don't have one, start investing. Open a $500 account, $1,000 account. Start investing. So, that's it. I think we're done. I see Chris in the background. He's doing something. I don't know what he's doing. So let me answer some questions before I, okay, this is my position screen. Let me look at some questions. So Vinny is here. I'm early. Yes, you are. Good afternoon. Thank you, B. Paul is here. Richie is here. I saw Richie at LAX on Wednesday. Neither party, no plan to ref. Okay. Reduce deficit. Yeah, look at gold. New highs every day. Vig G retailer. I don't know what that means. Yes, float CC money 30 days. Yeah, exactly. Yeah, MicroStrategy 237. Exactly. Is it 237? Up another, so MicroStrategy keeps going up while Bitcoin is still flat. So there is some sort of arbitrage play there, which I'm putting on, but it may be too complicated for you guys. Joey BTV. Hey, Joe, what's up? I saw Joe. Did you short SPY and QQQ? When I show you my positions, I will talk about that. Yes, I did not short, but I bought some puts that I had double or tripled. Because okay, you guys are following my positions, so they're as clear as day. They're right there, okay, on the community page. I'm going to post this, whatever this looks like at the end, so you guys will know. Baba Billy, absolutely. We'll talk about that. We'll go through my watch list. So this is my trading screen, my position screen, and let's talk about it. Okay, so from Wednesday to today, it looks a lot different. Wednesday was ridiculous amount of positions, and I liquidated most of it. So more importantly, this morning, I shorted a ton of. Okay, let's go through the positions. First of all, I only have Unity software left on the long side. I bought 10 more today. I'm up to 90, and that's where I'm going to stop. I started buying this small stock called Howell. I bought 4,000 shares today. I'm going to buy up to 10,000 shares of the stock. HOWL is the symbol. Werewolf Therapeutics. I like the stock. They have about $3 in cash already. Stock is selling at 324. They have a binary product that's about to come out. Stock was about 4.5. It pulled back to 320. It could pull back to 250, 280, but I'm going to scale in as usual. So far I bought 4,000 shares with an average cost of 325, let's say. Right now we're at 305. I have buy orders at 295, 85, 75, and 65. Hopefully we'll get there. More importantly, here's what I bought 30 NNE, which is VIX stock, nanonuclear yesterday. I bought 30 calls. Yesterday sold 20 at 320 this morning. Luckily I did, because I see markets really selling off now. So we'll see what happens there when I go to the watch list. I only have 10 left. My cost is $2. They're about 210, 230. So I'm a couple of $100 profit. But this morning I sold actually here. This is, I think I sold it at 3 and 320 or 280 and 320. Let me see. Yeah, right there. And then the average sell price 295. My cost was 2, so I took a 50% profit in a day. That's where we are. And then what did I do this morning? As soon as the market opened, I started buying puts on the triple Qs. I'm up to 40 puts now. November, and the same ones that I tripled my money with. If you guys were watching from Monday to Wednesday, Wednesday market absolutely crashed. And so the point I'm trying to make to all of you is, you got to trade, right? So this morning I started immediately buying puts, and then the higher the market went, I kept adding. I'm long 20 of the 490 puts, and I'm long 20 of the 495 puts. And as of the second, index dropped 495. I mean, markets was up, triple Qs were up, NASDAQ was up anyway, close to 260 points. It looks like it's almost unchanged. Now, I bought the puts on various prices on the legging in, scaling in, scaling out, obviously. So I own 20 puts again. These were the same puts that I bought and sold between Monday and Wednesday. I mean, on Wednesdays at the low, I nailed those puts. They got up to 495s, got up to like 16. I sold some of them at 15, 14, 13, scale in, scale out. Again, the positions are there. You guys need to look at the positions and say, okay, Sergio's long puts. Now, I sold them on Wednesday. By the time I posted it on Wednesday, there were no puts in the account. That means you guys know what happened, right? If I was long 40, 50, 60 puts on Monday, and I have 0 on Wednesday when I posted, that means I sold them, clearly. And obviously at a profit because market tanked on Wednesday. Out of all days, the day I was going to LAX on top of that. Boy, do I have an LAX story for you guys anyway, but then that's for the other channel. So, yeah, I'm long 20 of the November 15 490 puts. My cost on those is 740. They're 827. I'm up about 2,300 on those. I bought 20 of the 495 puts with a cost of 933. They're about 1020. I'm up about 2,500 on those as well. And now I collared it with the index with the 495 0 DTE puts, which is 494.68. And I sold a bunch of those against it. Now, if it goes below 495, great. My long puts are going to make up for all of it. And they're about $1 now. So the index is 494.85, 90. They're going to be worth 10 cents. They're $1 now. So I'm going to collect a ton more premium, right? And then, so we'll see where the day ends. Hopefully, it'll all turn good. But it doesn't really matter if the index drops to 492 today or whatever, or reverses and puts a huge candle down, I'm not worried about it because I'm long the puts, right? I'm long the 495s and 490s for November 15th. I'm going to do one thing that I want you to guys understand is, I'm going to talk a little bit about my DJT trade. Let's do that. All right, so this is DJT. DJT is Donald J. Trump. That's the symbol. And this is my option screen. I'm going to directly go to the November 15th. Okay, this is the option chain. You all have access to this on your platforms. Stock is up 3.5, up another 10% at 38.40. Today's high was, I think, 38.70-ish range. I'm not sure. Doesn't really matter. So these are all the puts and calls. Okay, remember the short strangle that I was talking to you guys about, right? All right, let's look at the put side first. All right, so here we go. The puts on DJT for November 15th expiration are $1.10. These are the $15 puts. $10 puts are 45 cents. That's a little too low for me. So there's two ways I'm going to do this. The put credit spreads are going to be, I'm going to short the $15 puts at $1.10, let's say. But then I'm going to turn around and buy $10 puts. So the difference is what I'm going to keep, which is $1.10 minus 45.50, let's say 60 cents. That's my max profit potential, okay? The reason for that is, if you guys can look at this column here where it says IV up there, implied volatility, on these puts, IV is up to 372%. Okay, even if the stock moves down to 15, these things are going to get crushed. Okay, so on the call side, understand this. Now, ask me questions about this, please. So now I'm going to the call side. On the call side, the all-time high on the stock was 75. Okay, I'm going to go with the 75 calls. The 75 calls are $3, IV of 282%. Okay. I don't care what happens to the elections. If Trump wins or if Trump loses, the stock is going to tank and these calls are going to go zero. But even if Trump wins, the way the credit call spread is going to work out is, or call credit spread is going to work out is, I'm going to sell these 75 calls, sell, okay? And then I'm going to turn around and buy the 85 calls, buy the 90 calls at $2. So even if the stock goes, flies to 100, I'm protected. Now, there's two ways of doing this. That's the put credit call spread and call credit call spreads that you can sell. But I'm going to be more ballsy, okay? I'm going to sell the calls straight up because I can always hedge myself by buying the underlying equity. I can be a market maker. So I'm actually want to become a market maker on this one, the trade that I'm looking at. The calls are at 280 IV, implied volatility. They run about 80 to 120 on average. So the market maker has pumped this as much. This is like a balloon, pumped it as much as they can. So even if you're buying these calls, hoping and thinking Trump is going to win, these are $75 strike prices. Stock is only 38. Stock has to double from here for you to even think of making money on these options. Okay. And then I'm thinking I'm going to sell the 75 calls for November 15th, and I'm going to sell the 15 puts and have a short strangle on. And I'm thinking that the stock is going to stay between 15 and 75. And the day after the elections, this IV is going to get crushed. So that's the theta decay. That's the time decay that I'm going to take advantage of. And that's going to be my strategy. Will I put some on today? Possibly. Will I put some on? I'm actually, the way I like doing these short strangles is when the stock is exactly halfway. So let's think about it. 38 to 15, the puts that I'm going to short, is $23, right? 38 to 75 is $38. So what I want to do is that I want to put this on right about when the stock is 45. So then I'll be 30 away from the downside and I'll be 30 away from the upside. And that's what usually works best when you're doing these short strangles. So I'm definitely going to put this position on. And if Trump wins and stock gaps up 10 points, great. Those options will not go anywhere because IV has been pumped up, and I can always buy other calls. I can always buy the underlying security to hedge myself, just like the market makers do. And if Trump loses, stock tanks, I'm willing to buy the stock at 15 minus the $5 premium I'm going to collect at $10 a share. And then turn around and start selling cover calls. So I have I have the plan in my head. Remember the 3 Ps: position, right? I mean, patience, position, and plan. I'm patiently waiting until the stock moves up a little higher, and then the balloon gets a little more pumped, and then I will crush this IV with no doubt about it in my mind. I've done this a million times. Actually, I did it on GME very successfully. So let's look at the monitor again. All right, so let me answer some questions first before I go into I'm gonna yeah, let's answer some questions, and then I'll go into my watch list, and then I'll say goodbye to you guys. This market is now back to 495.15. If that's the MVC, if you guys know what MVC is, max pain point, it's probably 495 on the index. They're probably going to stick it right at 495. My short daily zero DTEs are going to expire worthless, and my longs are going to do wonderfully well. So we'll see. We'll see where we end up. But then please go to the community page at the end of today and check my positions out. Let's see where this is. This may not even be there today, but you guys are seeing it now. I'm long 20 of the triple Q November 15 490 puts with a cost of 747. I'm long 15 of the 495 puts with a cost of 933. The one is 8 and change. The other one is 10. I have profits on both, but I'm also short 40. See, 20 plus 20 is 40. I'm short the 44.95, zero DTEs against it. So worst comes to worst, those expire worthless. What happens? It lowers my cost completely, right? So, and then I'll do it again on Monday. I'll do it again on Tuesday. I'll do it again on Wednesday. By the time this game is over, I have lowered my cost immensely. Hopefully you guys are all following what I'm trying to say here. So let me go to, and then I'll do the watch list, and then I'll answer a quick few questions for now. And let's see. Okay. Did you buy puts today? Vic says. Well, now you know the answer. I will go through Baba and Billy, Mojotronics. You said Robinhood. Okay. You said Robinhood doesn't allow you to do things you do in your, yes, it doesn't. How did trading become because of the size of the account? Not necessarily because of the size. Robinhood just will not allow you to short things, short equities anyway. What is the minimum you need to invest to use the other account? $25,000. So that way you don't have PDT rules, pattern day trader rules. What that gives you? Yes, it gives me many like this strategy on DJT. You can do on Robinhood, but you have to have a margin account. You have to be approved, and you have to be approved for level 3 at Robinhood, my option level 3. Sometimes they don't allow you to do that. Are you doing any pre-market trading when you day trade? No, I don't do pre-market trading. I have enough time. I have plenty of things to do during open market hours. Yeah, I know who you're asking about, your other guy there, your idol over there. No, I'm your idol, not that guy. That guy is just fucking swinging shit pre-market, after market every day. But I made 100%. I'm like, okay, buddy, good. Only 1 out of a million people can do that. No, I don't day trade actually too much. I mean, if I see something, I'm gonna do it. But I'm buying things. Like I bought HOWL. Yeah, I agree with Vic on that one. Pre-market and aftermarket trading is completely done by algos and very, very thin. You will get screwed most likely. So Mojotronic says, been scalping with low dollars and coming out green. Okay. This is a good question. Been scalping with low dollars. Scalping, yeah, that's what scalping is fine. And coming out green. Okay. Yeah, but you're gonna end up blowing it. I'm telling you. So just patience, man. Just buy things and hold things. I mean, what's the problem here? But I just had my blood pressure checked first time. Okay. No, well, it could be. It could be. I don't know. My blood pressure actually goes down when I'm trading. But then please go check out Anthony Crudelli's interview. It's on the channel under Insiders of Wall Street. He was 36 years old. He was a full-time floor trader. At 36, he had a heart attack. There is correlation. It's a stressful thing to do. But then if you handle it like I do, have everything ready, everything set, plan is ready, execute the plan, your stress goes down immensely. More dollars. Yeah. Okay. Well, maybe it's directly correlated. I don't know. Yeah, exactly. I know who exactly you're talking about. So I don't know. Look, man, there's many ways to skin a cat. He has found a way, and he's got 1.5 million, subscriber YouTube channel, and he swings pre-market, after-market. He swings 10s, 20,000 shares for 10 cents. Ain't my style. I ain't gonna do it. Is it a viable thing to do for long term for you? No. The way he trades, he uses an overseas brokerage account. There's no zero DTEs there. They give him a lot more leverage. Look, man, there's many things about that guy that I can talk about. Look, but he's making money. Obviously, proof is in the pudding. But not for me. I go steady and slow. Look, man, I'm up 200% this year. Actually, it's going to be over today if the market tanks this coming month. This month, actually, before or after the elections. 200% is plenty for me. I'm not playing with like chunk change either, so I'm all good. So let's go to the watch list. Yeah, insiders were great. Please go check it out. Please, please, please. Let's go to charts. Okay, what's happening here? DJT. Okay, let's make this proper. All right, so this is going to be my watch list. I'm going to go through it quick. I got to pay attention to expiration. Okay. Yeah. Okay. DJT. Yeah, DJT right here. I'm going to do it right about 45, halfway. Sell the call, sell the put. But, to each their own. All right, so we're, I don't know, if the market goes red today, we may be setting up for a key reversal day to the downside, which is not going to be funny. So these are the triple Qs. Let's make this large in charge. These are the triple Qs, people. This is the daily chart on triple Qs. Attempted a new high. If they turn this thing red today, it's not going to look good. Trust me. All right, so market gapped up this morning for whatever reason. We retested the high. 503.52 was the high on the triple Qs. We got up to 500 almost this morning, actually a little over 500, and then we're just kind of struggling. No problem, but chart's wonderful. Higher highs, higher lows, nothing bad to say. Spiders, S&P 500. These are all my positions, by the way. That's what I like about Think or Swim. So I'm long 20 puts, these puts. Okay, where am I on the puts? I'm up $2,000 on the 95s. I'm up exactly the same, $2,000 on the 90s, and I'm down $2,000 on the shorts. But you must understand, they're 495. They're going to expire worthless at the end of today at 115. If they're way under, great, then my longs are going to be a lot higher. And if they're right at 495 or a little bit, even a penny higher, they're going to expire worthless. So this 2,000, it just, is going to be in my pocket by the end of the day, one way or the other, people. You guys get it? Okay, let's go to spiders, SPY. SPY actually did turn red. Interesting. Okay, yeah, these puts may print again by next Wednesday, just like they did this Wednesday. Apple. Let's go through the Max 7. Max 7 earnings coming out this week, one after the other, people. Tuesday, Wednesday, Thursday. Apple, Google, Microsoft. Well, Tesla came out. We're going to look at Tesla. Holy crap. Let's see, what else? Apple, Google, NVIDIA's November 15th. Amazon, they're all coming out this week. It's going to be a huge earnings week. And they're all part of the triple Q. So Apple, higher highs, higher lows, nothing there. NVIDIA was making a new high today. It attempted it. It did make a new high 4 days ago at 143. Just about to take over Microsoft, but Microsoft had a huge 2 days. It's a nice looking chart, man. I'm not in it yet. Is there a trade here? There is. Okay, if you look at technicals, what kind of pattern is this? You guys will see Microsoft Google is the worst looking Mag 7. I mean, it's just going sideways, but it takes out 170. Google is, going to take out not take out, but retest the old high. Netflix, new highs. Earnings came out last week. Gapped up. I mean, look, higher lows. Follow a trend, people. Don't mess around with anything else. And Tesla, holy crap, it's up another 6 today, or 5. It's retesting the old high. If I had Tesla, I would definitely sell it. I don't think actually the earnings were that good. But now, what is this pattern, people? Hey, Vic, remember you said this looks like a bear flag, right? Remember that? I think it was last week you said that. What does it look like now, Vic? What is this pattern called? You should know out of everybody. All right, people, for all the members who are reading the books, what is this pattern called? On Wednesday, I'm going to ask you guys, research it. So stock gap down after the what? Robotaxi event. Then went sideways, hugged the 200-day average for 6 or 7 days. And then yesterday's earnings came out and gapped up. So it left a gap on the way down and gap on the way up. So what is this called? Maybe some of you know, and I'm just going to put it in the chat by the time I get back. Right here, I'm circling it. I bet you Vinny knows if he's still here. So I'm going to go through my charts. Affirm has not left the building yet. It's pulling back to the 50-day. It's getting into the buy range. Somewhere around $40. Buy for a visit to 50. AMD. Nothing there, nothing burger on AMD. They can't be in the market all the time. Amazon. Did I look at Amazon? Yeah, Amazon is looking like Google. Actually, I mean, it's better looking than Google. Baba pulling back to the buy point. I mean, hello, right on top of the 50. If you're going to give it a shot, right about 95. Actually, yesterday it was on top of the 50. 95 looks reasonable to me. Risk is low. 50-day average you're buying at. MACD is going down like sharply, so that's the only thing, but the volume is also contracting. So Baba I had in the 70s. In my long-term portfolio, as I said, go watch the power hours. I trimmed it. I'm still long Baba on my long-term account, but about 50%. Baidu, yeah. So this thing like zoomed up and zoomed down. Now we're under the 50, under the 200, under the 20 EMA. I'm not interested. Billy, I think Billy is also right on top of I traded Billy actually this week. Billy up today. Okay, right on the. I mean, oh my God, it kissed it. It kissed the 50-day. I like Billy. Actually, I may buy some Billy. I like Billy. Buy the stock, people. Don't follow me in options. Options are weird. If you want to do something, buy the stock. Capricorn. They did the secondary at 17, of course, like an idiot. I didn't buy that one. It's okay. Remember, I was short CCJ, guys. Did you see the position on Monday to Wednesday? That thing tripled. Getting into a buy point, though, 952. First pull back to 20 EMA is always a good buy on these. So, what else? I'm going to go fast. Carvana, new highs. Hello. How long have I been talking about Carvana? Look at this. I wouldn't buy it with your money, though. I'll be really careful. Volume is really anemic. It's really drying. Earnings are about to come out. It's in an upper part of the channel. I would just be a watcher on this. In fact, if you want to take a stab on the downside, but don't do anything. Just wait until it starts moving. Goldman Sachs, great earnings. Although chart's not agreeing with that. Let's see. Howell is the one that I'm buying today. So at 295, I'm going to buy another 1,000 shares. I bought 4,000 shares already. So this is the Howell chart. HOWL, $3 stock. I looked at the fundamentals. I like the fundamentals. I like their cash position. They don't have to do a raise, so I don't get nailed. Stock went from about 2 to 4 and change in 3 days on really high volume. Now it's kind of pulling back. I love these pullbacks on absolutely no volume. I'm long 4,000 shares, average of 324. I will buy up to 10,000 shares of this, specifically if it pulls back. Every 10 cents down, I'm buying. So if it breaks 3 today at 295, I'm going to buy another 1,000 shares. And at 285, I'm going to buy another 1,000, 75, 65, and 55. It broke from a really beautiful downtrend. It broke out on high volume. As you guys know, these are my favorite setups. A long-term, maybe three months base. Gapped up. Why? Catalyst was there. Not earnings, but their drug is going to get approval. H.C. Wainwright put a $9 target on this. Stock is 3 people. That's a brokerage house. But if you look at Howell's long-term chart, 3-year chart, okay, it's just coming out. You guys see what's happening here? It had this kind of move before. It went from 2 to 8 and then pulled all the way back to 2. Now we're doing it again. But this time we're doing it on reason as opposed to anything else. This used to be a $20 number, by the way. I like it. I'm going to accumulate it, and I'm going to enjoy it. It has options. I wouldn't do options on this. It's a $3 stock. Buying a $3 stock is like buying an option with no time limit. So I will accumulate this. I started already. So that's that. Okay. Seeing this, not only on the trade options, no, I also trade equities. HOWL was that. Let's keep going. First Solar got away because it broke down. Once things break down, I don't pay attention to them. JD.com, no. Yeah, a lot of you were asking. I think some people asked me about Joby, you know, the aeronautics, the EV tolls, the ones electric, you know, electric flying cars or whatever. So they announced a major secondary, and stock is down like 18%. You got to be careful with these things, man. Okay, Lunar, I'm out. As you guys know, it moved like I still like it, but this time I think I will trade the equity as opposed to the options. Still going sideways, still above the 20, still above the 50. I still like it. Nothing wrong with it. MicroStrategy. Let's look at the MicroStrategy and its surrogates. Look, the Bitcoin chart. This is the Bitcoin surrogate, dollar for dollar, which is IBIT, which is the Vanguard Bitcoin ETF. Look at that chart. Not bit. Oh my God, I'm dyslexic. Okay, IBIT. Look at that chart. You guys see that chart? That's exactly what Bitcoin has done. Sideways. Okay. And look at MicroStrategy. Look at the difference. So a lot of people on Wall Street are saying MicroStrategy should not be here. Okay, well, it is here, people. Look at MicroStrategy versus Bitcoin. It did sideways, just like Bitcoin, but now it broke out. So people are believing in MicroStrategy that them issuing convertible bonds and buying Bitcoin is going to work out. And if Bitcoin breaks out, this thing is going to absolutely go nuts. However, if you want to go more nuts, there is BITX, which is the 2x version of Bitcoin. And as you guys can see, that's not done much either, right? So if you want a little bit of a steroid pump or a supercharged, turbocharged BITX, if Bitcoin is going to break out, BITX should be your horse. And if MicroStrategy is your horse, now MSTU, they just brought out, MSTU is 2x version of MicroStrategy. So if MicroStrategy goes up 10%, MSTU is going to go up 20%. And MSTX is 1.7 times. So as if we needed more gambling, you know, this is MSTX, right? So as if we needed more leverage, they came with it, obviously. So I did trade NNE. Okay, well, I'm holding 10 calls. As you guys can tell, I'm not holding too many calls. I cleaned up all the calls. Somebody in the past had said Palantir has topped for good. No, making new highs today. That was that pullback, that little mini pullback that you guys are going to get. Triple Qs are now 496. Okay, so my 495s are going to hit the wall. Wonderful. But then I'll keep the November 495s and 490s. No problem. In fact, I'll sell them for Monday. What else? PLL. I think PLL bounced, didn't it? Yeah, it did bounce. Actually, the day after I did the live on Monday. Yeah, I still don't like it. Well, I mean, I like it, but not to the point that I'm going to go crazy with it. This is the problem, people. TLT. Inverse 20-year Treasury bond ETF. The Fed cut the rates. It was 101. You would think it'll go to 105. It's 92. Rates have shot up since Fed cut the rates. Unity Software I'm regurgitating on this one. It's breaking down now. I have calls. I'm most likely going to take a loss on this, but then I'm balanced with the other puts and all other positions, so I'm not concerned. So if you are going to follow me and you do just single one of my ideas and you lose money, don't come crying. You know, got to have a balance. And this is Zillow, right on the 50-day. Okay. Yeah. I'm going to give it a shot. Low risk, really. Risk is about 56, 57. So risking 5 to a retest of 70. Stock is 60. You know, there are some good charts out there, but I'm really being cautious with the market right now. Really, really cautious. So this is the triple Qs. Triple Qs are 496.18. Yeah, we got down to 494.48. Now we're at 496. Let's look at the monitor one more time. So my short puts are down to 32 cents. Beautiful. Remember, I was like down $2,000 on those. Now I'm down $230, and at the end of the day, I'll be up $2,000 on those. But then my long puts also lose value when the market rallies, but I'm lowering my cost completely on these. So I was hoping to buy it, you know. So I'm long 4,000 werewolf. I will put the positions as they are at the end of the day on the community page. I'm going to answer some questions and say goodbye to you all. Okie dokie. Let's see if you have questions. What's happening? You have questions? Questions. All right, let's see. Mojotronics. No, Mojotronics. If you're new, yeah, Vic. You listen to Vic. Idle, haha. Mojotronics says, thanks for the advice. Yes, please watch that. When you're correct on trade and have profit. Yeah, okay. And more context, please. Okay. Why did Tesla gap up yesterday? I listened to earnings call. I have yes. Well, no. See, this is the problem. You have a negative bias towards Elon. Elon is not Tesla. Well, it kind of is, but then I had FOMO today. You bought it today. Why didn't you buy it yesterday? The thing opened up 20 and ended up going up 50. So you can't do FOMO. You can't do any of these things. There's no personal problems here with Elon. I love Elon, but I think Tesla is completely overvalued. That's my, you know, but I'm not going to go short Tesla. Actually, I may sell some calls against it, take some premium in. But no, don't do FOMO. I'm going to do a shirt, you know, stop sign, FOMO, YOLO, HODL, with a stop sign right above it. Don't do that. When do you 10x your trade and violate your 68% rule? I usually don't violate it if I'm in equities. If I'm in options, I don't have a hard stop. I'll just read the market and see what it could give me and what it could take away from me. So when do you 10x your trade? I don't know about 10x. 10x are hard to get. Not take profit. Yeah, absolutely. Well, no, you have a target set. If the stock can get there the next day, you take it. You know, as long as you have it on the underlying, if you have a target set, you could get there the next day, you could get there in a week. My targets are never 10x, especially these days when I think, you know, they were maybe 4x when the market was, you know, getting going. Now that we're here, I know what the downside is. I'm trying to always hit singles and doubles max. I'm not trying to go for home runs. A lot more singles are equal to a full run, right? If I'd hit two singles, it'll be a run scored. So, or three singles, or a double and a single. My idea is never 10x. I can't go for 10x these days because I think the risk is immense on the downside. After 2 months, this slow and steady thing ain't working for me. Okay, well, you need to learn how to crawl, walk before you can run, Mojotronics. If you do that, you're gonna get blown out. I'm assuring you that. But I can't tell you not to do it. Oh, there's Vic. Vic knows. Island. That's correct. That's an island reversal on Tesla. What's up, Mr. Beard? Driven Dad, how are you? Mr. Beard has a lot of kids. I'm not going to say how many. Yeah, Mojotronics. You need to come back to which put you straight on Wednesday, bro, on your members live. This thing is not working for me already. After a month, you're like a professional already. You know, come on now. What does that mean? Not enough adrenaline? Come on, bro. 3Ps, got it. Yes, calm down, Mojotronics. You can't be a millionaire overnight. You just can't. You're going to blow your account. I'm telling you. I will hate to see you go because I think you're on the right path of learning. But if you're going to watch all these other people saying, oh, look, I made 100%. Oh, look, I bought a Lamborghini. I'm like, I'm telling you, you're gonna blow accounts. It's okay though. You know, one way to learn. It ain't the membership fee you're paying here. You're gonna learn by blowing accounts. Driven Dad, what's up? How's everyone? Any other questions? No. Okay, so much love to you all. I have 5 more minutes. Let me go back to yeah. I'm gonna spank you on Wednesday when you show up to the lives, to the members only live. Did you get your T-shirt? You got your T-shirt, right? I think you did. So let's summarize all this. If you guys decide to become a member and an existing member already, email me Sergio at sergioavedian.com. The color, the size, and your physical address in order for you to be a member. You get a free one of these T-shirts, #KnowYourWorth T-shirt. They're extremely well done. You get it for free. You get it shipped for free. You're not paying for anything just to become a member. And this T-shirt on Gig With It website is $30 plus shipping. So you guys are getting a good deal. Membership's $10. And as a member, you're going to get 2 extra live streams where you all join and watch me spank Mojotronics on Wednesday. Members only live streams are going to be 2 Mondays and 2 extra live streams every 2 weeks on Wednesday, 3 p.m. Pacific, 6 p.m. Eastern. Those are the members only. Regulars who are here now are not going to be able to watch that. And they can't watch it later either because it's still members only. That's the privilege of being a member plus a T-shirt. I think it's too much, but it is what it is. Mondays, Trading with Sergio continues indefinitely. 10 a.m. Pacific, 1 p.m. Eastern. Fridays, Power Hour continues indefinitely. 10 a.m. Pacific, 1 p.m. Eastern. You all have an amazing weekend. And let's take a look at the charts one more time. Not charts, but the positions. And we will be going home. Well, I am home. What am I saying? All right, let's see where we are. Okay, so index 496, those calls are going to be mine. I'm going to collect all that premium. No problem. I have profits on the long. It's a beautiful day today. I have no problems. My U is 1958. You dog shit. When shit don't see, Rich, this is the problem. I have 90 calls with an average cost of 80 cents. They're 40 cents. I have 3.5 weeks to go. On any move, I will take a loss and sell these, but I will not sell them now. I will sell at a loss probably of 20% because I'm trading options. If I was trading stocks, I would have gone out already. On here, I'll give you those actually, Rich. On Howell, HOWL, stock is 303. I bought 4,000 shares, average cost 324. I have scaling orders all the way up to 10,000 shares of this. I will buy, and I have no stop on that. I'm long 10 options at $2 on NNE, but I sold them at $2.95 this morning. I had 30. So I took a 50% plus profit already. They're 220, 240. I could sell it, take a $300 gain, but I'm not gonna. I'm gonna keep my puts. November 15, 495 and 490 puts on triple Qs. Index 496. The best thing today that could happen is that they peg the index at 495 or whatever max pain is. And then my 0 DTEs expire worthless. I collect all that money or buy them back at a penny. and go sell Mondays already, which I most likely will do. So with all that said, please go to the community page. Please, all my positions are there every Monday, Wednesday, Friday. Become a member, get a t-shirt, and join the next members live coming up this Wednesday, 3 p.m. Pacific, 6 p.m. Eastern, where I put the StreamYard link out and I see everybody's face and their actual names as opposed to YouTube names. And they are great. Seriously, seriously great. And that's it. See if I have a couple extra questions. Yes, I will spank you. William, thank you. On you, no, we don't deal with luck, buddy. No luck. Bad position, but it's okay. I have 6% in there. I'll take a hit. This week was ridiculous, big, so I'm not going to complain because everything on the long side worked actually. All the shorts. I mean, if you looked at the positions, how I was positioned Monday, you would know about. I was long puts on CCJ, 40 of them. I was long puts on OKLO. I was long 45 puts on the indexes. So you should figure that out. I don't pay attention to luck. Wrong call, loser, get out. Take your couple thousand loss, get out. As long as your overall equity is going up and up and up and up, and October has been an amazing, amazing, amazing trading month for me so far, I'm not going to complain. And you guys look at the positions. I mean, I don't know. I can't be more transparent than that. Yeah, see you Wednesday, Mojotronics. Yeah, keep watching that dude every morning before market opens when he makes $8 million in 8 minutes. Whatever. What is happening? I will not do what he does. Well, I can't do what he does. I guess he's good at that. So anyway, much love. Stay healthy. Be safe out there. I will see you guys on Monday, 10 a.m. Pacific, 1 p.m. Eastern for Trading with Sergio. I will see the members on Wednesday coming this week, 3 p.m. Pacific, 6 p.m. Eastern. And I will see all of you on Friday, Power Hour, 10 a.m. Pacific, 1 p.m. Eastern. Go check out the positions every Monday, Wednesday, Friday. And I think I froze. No, yeah. Okay. Anyway, my internet's gone conking out. So much love. Peace out. Yes, thank you. Don't you guys have the same birthday? Right? Shit. Sorry, Tony. Damn. Tony, happy belated birthday. Vinny, I hope you enjoyed the show. That's all I can do, buddy. Happy belated birthday, Driven Dad. Tony. Vinny, hope you enjoyed it. I think it was your first time. Hope you come back. And I don't know about is it a smiley face? Yeah, it's a smiley face. Okay, cool. So that's all I got. And hopefully those puts will print again. Going to buy a ton of Howell. Ton? No, not a ton. Not a ton. It's a $3 stock. So remember, Rich, maximum 8% of account value. You have a $1,000 account, $70 goes into Howell. If you have $10,000 account, right? Okay, $800 goes into Howell. I will tell you when to press it. We're buying on pullback. Right now we're buying on a dip, which was expected on low volume. Everything is good. Came off of a base, gapped up above 200, above 50. It's just pulling back on low volume. Catalyst is there. I think stock is going to do well. So, but not a ton. It's a biotech stock. You don't buy tons of biotech stock when they have a binary product, because that thing go to zero, although they have $3 in cash. So last, go to Yahoo Finance, put in HOWL, okay? And look at statistics of the company. Before you buy a stock, look at that. How much cash they have, their debt to equity, PE ratio, earnings, everything is there. I think Yahoo is amazing when it comes to that. Okay, go put it in there. Short position, outstanding shares. If they have an S1, I mean, You know, I use it all the time. Free. I mean, you don't need special stuff. But so there you go. All right, much love. Be safe. Stay healthy. The most important thing. I'll see you on Monday.